Hello everyone, here are the latest market news on August 14th, 2020. Asian shares and European stocks. MSCI's broadest index of Asia-Pacific shares outside Japan fell 0.14%, although shares in Japan rose 0.11%. Chinese shares rose 0.18% in choppy trade, but a slower-than-expected rise in industrial production and a surprise fall in retail sales weighed on investor sentiment. South Korean stocks fell 1.28% after authorities reported the largest number of new coronavirus cases since March. Eurostoxx 50 futures were down 0.27%. German DAX futures fell 0.22%, and FTSE futures fell 0.06%. The S&P 500 ended slightly lower on Thursday after briefly trading above its record closing high level for a second day as doubts about U.S. stimulus measures took hold. Funding for mail-in voting. According to the Democrats, Trump holds up coronavirus aid to block funding for mail-in voting. President Donald Trump blocked Democrats' effort to include funds for the U.S. Postal Service and election infrastructure in a new coronavirus relief bill. Congressional Democrats accused Republican Trump of trying to damage the struggling Postal Service to improve his chances of being re-elected. Trump has been railing against mail-in ballots for a month as a possible source of fraud, although millions of Americans, including much of the military, have cast absentee ballots by mail for years without such problems. Weak Japan's economy. Japan's economy will contract more than previously expected and suffer mild deflation during the current fiscal year. Analysts also see renewed escalating tensions between the United States and China as an additional source of concern for the world's third-largest economy, which is heavily relying on exports. The economy is forecast to shrink 5.6% in the current fiscal year to next March, more than a 5.3% contraction projected last month. In the worst-case scenario, it will shrink 8%. The downgrade came as many analysts revised their forecast for April-June gross domestic product to a 27% contraction, last month's worst-case forecast from a nearly 24% drop projected in July. Google stops to provide data to Hong Kong. Google said on Friday it would no longer provide data in response to requests from Hong Kong authorities following the enactment of a new national security law imposed by China. The U.S. tech giant would not directly respond to such requests, henceforth, it added. The company would now treat Hong Kong effectively the same as mainland China in such dealings. Tech companies have long operated freely in Hong Kong, a financial hub where internet access has been unaffected by the firewall imposed in mainland China, which blocks Google, Twitter, and Facebook. The national security law has drawn criticism from the administration of U.S. President Donald Trump and further raised U.S.-China tensions after Washington's decision to end the former British colony's special status under U.S. law.